if you are willing to take a risk, you have to be willing to lose money.
And it's not about taking on more risk, it's about taking on more responsibility.
It's not about more risk, it's just about thinking differently.
Why is it that banks tell us one thing, but build wealth the complete opposite? Well, I think it goes to the idea of the fact that we need to control everything and own nothing.
Amen. Yeah, because it's not just about hustling harder, it's about having a seat at the table and understanding exactly how the game is played. So by the end of this video, we hope to give you some huge nuggets that you can take and to start applying into your financial journey. Because as Darius said, it's all about controlling everything and owning nothing. And I just happened to wear this shirt for you today for this video. Following the money, family. Where is all of the money and how can you get a piece of a percentage, right? Because if we think about some of the most successful businesses in the world, we can look at banks for a moment. And on the Wealth Nation channel, we talk about banks all the time. Why do we talk about banks all the time? Is because they got all your money, right? Your money's in that bank, right. Just in case you didn't know. So why have we been so eager to give this institution our money? Why have we been so eager to ask for money from this institution? And why have we been so eager to just follow whatever it is that they say?
It's because we've been trained.
We've been conditioned.
We've been conditioned to have this thought, and as a matter of fact, it came from our parents. Our parents told us exactly how to operate with the bank, and we just continued it without any other thought.
Yeah, it was just muscle memory. And we're not saying that any of this is bad. We're just breaking down the things that we think about because we want to have a more profound conversation about money because we want to make sure that we're always leading people into ideas and expanding what you're thinking so that you can continue to create abundance in your life.
Right. And the first point that we want to make is the fact that debt itself isn't evil. It's actually a tool depending on how we use it. And the way we look at debt, or the way consumers look at debt, is the fact that I need this debt to go and buy this outfit. I need this debt and go and buy some product. But what ends up happening is we're getting in debt at a high interest rate, which is kind of like a hamster wheel where we get on this hamster wheel and we can't get off. Reason being is because we're paying principal plus another 20%. How in the world can you get off that hamster wheel?
Yeah.
It's really difficult.
And when you going exactly what you're talking about with debt. So what I want you to think about debt for just a moment is it's not about avoiding it. It's about controlling it. So what we've been conditioned, let's get credit cards to build our credit score. Let's get a car loan because we need a car. Let's get a mortgage. Let's get a house, right? How could we instead maybe control the situation where maybe we're renting a house for a longer period of time as opposed to getting in a mortgage, having a 6-7% interest rate for 15 to 30 years, who knows? And how could we better utilize that money that you would spend on a mortgage to start making investments to create cash flow instead of being dependent and living in that consumption life?
Right. So everything you said, just say, the last part, just say this is what the banks do. Because as we get paid, the first person that gets paid is your taxes. The next people that get paid is the bank. Reason being is your money is direct deposited into the bank after you pay your taxes. Now, at that point, as that money sits there, the banks pay you a small amount of interest. What that interest is being paid for is because it's a debt. It's a debt to the bank. So in order for them to make change that debt into an asset, they have to lend it out to you at a higher interest rate. So the banks are lending you collectively our money back to us at a higher interest rate. And that's a play in itself. They took a small interest rate and lent it out at a higher interest rate. That's the tool. So what we want to do is we want to follow the actions of the banks rather than listening to what they tell us to do.
And that goes back to own nothing and control everything.
Right.
So they didn't own anything. They're just controlling the flow of money. Hence, they don't own your house. Technically, in some ways they do.
They own the paperwork.
They own the paperwork. So if you default, guess what? They get that asset. So going back to not owning anything and controlling everything, how can you start taking bits and pieces of this and controlling more in your life?
Right. And here's the thing. You mentioned the cars.
Sure.
Like I wanted to talk about cars as an example because cars itself is I love cars, but cars are a depreciating asset. They lose their value. So anytime we making payments on a asset or on a liability, is going down. Regardless of what the interest rate is, you're still paying more than what the value of that thing is. And cars are a good example of that, of a depreciating asset in which we make interest payments on. So even if you got a low interest rate, let's say it's 2%, that car isn't appreciating in value. So how much money are you making in that? Or are you really losing money?
Yeah, it's costing you money. In
Right.
any event, regardless if you get 0% interest, you're still losing money because it is a depreciating asset. So just things to consider. Going back to how can you control more and own nothing? So how can you have like car loans out? How can you become the bank in the instance for your families members who are already going to go get a loan? Right? You know they're going to go get a loan. So how can you essentially give them the loan so that they can get the car? You don't necessarily own it, but you own the paperwork, just like the bank.
Right.
Right. So thinking about all the different ways you can make little shifts in your life without continuing to fall into the trap of consumerism and just capitalism.
Right. It's not necessarily a full-blown shift where you need to go and do something crazy. It's just a shift in thinking.
Yeah.
It's a shift in mindset is what we're discussing on this video.
Yeah, every time you go to make a purchase, it's just, could I have done this differently? That's something that I know we're constantly challenging ourselves with. Could we have done something differently? And even with investments and things that we have been involved in, we definitely evaluate and go, you know, maybe we could have done this better, and we apply that on the next transaction. So the next point that we have to ingrain in you is that if you are willing to take a risk, you have to be willing to lose money. It's just that simple. So I want to let you know that the individuals who are avid investors, they are educated and they aren't going to take a risk because they're educated. So I can't tell you how many times I speak to people, you know, throughout the Wealth Nation community, and they're like, yeah, I'm going to start investing. Well, what are you going to invest in? Well, I don't know. I'm not really sure because I don't understand it. So why are you investing? That's my number one question. If you don't understand, then you shouldn't be giving your money to anything that you don't understand, because that is going to be the treacherous ladder that you start climbing as far as losing money. So when we think about the billionaires of the world, they are taking strategic money moves and they aren't risking anything, because when you get to that certain level of wealth, ain't nobody taking risks. They know where their money is going, what their paybacks are, what their collateral is, what their exit strategies are. They know exactly the moves that they need to make so that they can save every penny that they have.
Right. So for a good example of this is your financial advisor or bank advisor might tell you to invest in the market, but they're not investing in the market themselves. They're telling you to take the risk by putting your money in the market, but they're not doing it themselves. What banks invest in is, or put their money in, is bank-owned life insurance. Bank-owned life insurance represent tier 1 asset on the bank's books. How much of that do you have on your books? And the reason being is because of the control and stability that it has.
Yes.
The market doesn't have control and stability, but the bank-owned life insurance does. So they leverage that cash value to have access to more funds. Now, also, when we think about individuals who may be investing in the market, the first person that comes to mind is Warren Buffett.
Okay. Sure.
Warren Buffett probably is one of the most successful people that invest in the market that I can think of. But like you said, he's educated. And how much risk is he taking when he's educated? Because he's buying entire companies rather than just buying a couple shares and hoping that
Here and there.
Yeah, here and there, and hoping that the company continues to do, you know, what it does. Well, that's the difference. There's still control there versus risk.
Yeah. And it just goes back to wealthy people aren't going to play into the hype. They're going to build stability, like you talked about, and they're going to grow from stability. And we can see this play out in every facet of our lives, right? You're not going to build a house on sand, right? You're going to build a house on a solid foundation and everything else moving forward. So going back to controlling everything and owning nothing, what are things that you can continue to do as it pertains to growing your money? The next thing is we are taught to lock our money away for decades, right? But when you think about wealthy individuals, do you think they're locking their money away? No, they need liquidity. They need their money to be moving constantly, and they're not going to trap their money in accounts that they can't touch or they're penalized. So again, just think about this for a moment, family, because the average American is spending more money in interest than they are actually saving themselves. And in addition to that, not only are they spending more in interest, their money is locked away in accounts that they can't access. So when it comes time to you needing to invest or even to pay for an emergency or whatever it is, you don't have the cash on hand because you have your money locked away. So going back to needing money, controlling everything and owning nothing, how can you control anything when your money is locked away?
Right. And I think what we should also consider in this example is discipline. Some people need to have their money locked away. And,
you know who we're talking about.
In a retirement account, because if they don't, they wouldn't do anything
with
it. Because we are in a system of consumption. The system has been created so that we consume.
Yes.
And if we have all of our money, we're going to spend all of our money. But without that level of protection from a retirement account that locks our money away for 30 years and penalizes us if we go and get it, that could be a good thing for some people. And the some people that I'm talking about, you know who you are. Now, for those of us that are others that have some restraint and some discipline on how they can better utilize their money their own way, then they need to have access to it. And just like the banks don't lock their money away.
No.
They tell you to lock your money away with them, but then they use it. So just like that money being locked away for 30 years, it might be locked away from you, but it's still being used. That's how it's able to earn interest. The only way you earn money in any way, shape, or form is for it to be utilized. It's for action to be taken with it. And if you're not doing it, there's somebody that is benefiting from your money more than you and paying you the difference. So that's something to take in consideration when we talk about our money being locked away in our retirement account, our money being put in our savings account. It's the fact that that money is sitting there, not being used by us. Somebody else is getting a better benefit from our funds than we do because they have a better plan for our funds than us.
The moral of the story, family, is that you are being trained to consume by a system that was created by creators. So it's time for you to regain back control and understand what you are doing and why are you doing it and who is it serving at the end of the day. Because if you want financial freedom, if you want to get out of debt, if you want to save more money, if you want to have guaranteed income, whatever it is, you have to start controlling more of your income. And you're never going to get ahead if you're always dependent on the system.
Right. And it's not about taking on more risk. It's about taking on more responsibility.
Oof.
It's about taking on more responsibility because you are the person that went out and earned that money to give it to somebody else to make more money with your money than you did. And you're the one that put in the time that you don't get back. So again, it's not about taking on more risk. It's about taking on more responsibility so that we can get the results that we deserve and that we're looking for.
Yeah, it's not about more risk. It's just about thinking differently and changing your mindset. And that's all we ever challenge you to do here on the Wealth Nation channel, is to challenge what you've been taught, challenge your actions, and challenge every single day. Because nothing is going to change unless you change your mind. And once you change your mind, your whole life will change.
Right, if you want more content on whole life insurance, check out our next video.
And remember to own your own lifestyle.
Or someone else will.
We've borrowed from our whole life insurance policy to pay off credit card debt, buy a car, invest in real estate, pay for vacations, and pay for our utility bills. Sound crazy? It's not. My name is Carmen.
And I'm Darius.